Good evening, Garage Gang. It's Thursday night, and the track is glowing red. Markets shaking, liquidity boiling, headlines hitting faster than dice on a Fremont table. Michael Saylor up 2.8 billion on paper. Apple printing 102 billion in quarterly revenue. Coinbase buying 299 million worth of Bitcoin while posting 1.86 billion in revenue. Trump calls his meeting with Xi Jinping amazing. And yet, $100 million liquidated in the last hour. Crypto bleeding, equities cheering. The math doesn't add up, but that's why we're here. No suits, no scripts, no PR polish, just straight torque from the garage. I'm Avatar John, your anchor, your translator, your degenerate philosopher with a mic. Tonight, we break the illusion. Record profits, mass layoffs, ETF inflows, but prices dropping. Something under the hood is off, and we're gonna find it. And we all know why you're really here. Triple X is in the garage, the man they call Christian, Trenchmaster, Data Assassin, the guy with tonight's plays. So smash that like, hit follow, and share this with your crew, or that one coworker who still swears Shiba's going to $1. This is the garage. This is the pressure test. Let's drop it into gear. Wall Street still drunk on its own champagne. Apple beats. Meta raises 25 billion in bonds. JP Morgan prints record profits. Every anchor on CNBC smiles like they solved economics. But out here, layoffs are falling like confetti at a funeral. This rally isn't built on profit. It's built on illusion, cheap credit, corporate debt, central bank mercy. The Fed didn't cut because the system's strong. They cut because it's cracking. The VIX snaps at 16, but the MOVE index screams 65. That's not calm. That's pressure building under the hood. Companies fire workers. Stocks go up. They call it efficiency. I call it corporate cannibalism. They cut flesh to feed the chart. Then comes the paradox. Total spot Bitcoin ETF volume, over $1 billion in the first 30 minutes of trading, and price drops. Doesn't make sense, does it? So we looked under the hood. Exchange reserves collapsing. Barely 14% of total supply left on exchanges. That's the lowest level in 7 years. And that tells a different story. This isn't weakness, it's stealth accumulation. ETFs and whales aren't buying on exchanges. They're buying through OTC desks, quietly, off book. Those coins vanish into cold wallets and institutional custody. Never touch the order books. Meanwhile, market makers scatter small cell walls across exchanges. Little fake pressure. A smokescreen of liquidity. It keeps the chart flat while the vaults fill up. That's controlled compression. That's engineered gravity. Leverage flushed. Funding neutral. Perfect environment for accumulation. The crowd thinks the game's over, but the real money's still buying the dip, quietly, one block at a time. They're not suppressing price because they hate crypto. They're suppressing it because they're still loading. When the float runs dry and inflows return, the next leg isn't a rally, it's a detonation. Then Jamie Dimon walks in, the self-appointed sheriff of global finance. The man who called Bitcoin a fraud, said it would end badly. Now he's saying crypto and stablecoins will be used by all major banks to facilitate better transactions. The banker who laughed at Bitcoin now wants to build on its rails. The empire that mocked the rebels just copied their blueprints. He went from "it's a scam" to "it's the future" faster than a meme coin pumps on a Sunday. That's not conviction. That's capitulation. He finally sees what we've known for years. Crypto isn't a toy. It's a threat. And every bank on earth either plugs into the blockchain or gets left behind like Blockbuster in a Netflix world. Jamie Dimon didn't find religion. His risk desk did the math. Stablecoins settle faster. On-chain liquidity never sleeps. Tokenization cuts a dozen middlemen out of every trade. Now the same system that called us criminals wants our tech, our speed, our edge. They're not embracing innovation, they're surrendering to it. The future isn't asking permission anymore. It's routing around bureaucracy. ETF volume exploding, prices holding flat, banks lining up to build on-chain. They mocked the fire until it started heating their own building. And here in the garage, We just smile. Because when the people who said it'll die start asking, how do we join? That's not the end of the revolution. That's the moment it won. You can feel it now. The handoff, the merge. The old world still runs on paperwork, phone calls, and middlemen. The new world runs on code, custody, and speed. JP Morgan's tokenization platform launching 2026. The same bank that called crypto poison, now minting digital assets like it's salvation. That's not innovation, that's survival. They finally figured it out. Blockchain doesn't need banks, banks need blockchain. Meta's $25 billion bond raise isn't just debt, it's fuel. Fuel for AI, fuel for automation, fuel for the next financial engine. Apple stacking liquidity for its AI silicon rollout. Coinbase, no longer an exchange. It's Wall Street's new clearinghouse. They bought 299 million worth of Bitcoin, posted 1.86 billion in revenue, and became the vault for the digital era. This is the merge, where TradFi's rails fuse with crypto's engine, and AI becomes the driver. Money, computation, intelligence, all converging into one operating system. No humans required, just algorithms clearing in microseconds. Tokenization turns every share, every bond, every mortgage into programmable collateral. AI scans the data. Blockchain clears the trade. Value moves like information. That's the new stack. Hardware is oil. Data is currency. Crypto is the bloodstream, and the networks that move fastest win. So when Jamie Dimon admits his empire's building on the rails he once mocked, you know the story's over. Institutions aren't fighting decentralization anymore. They're feeding on it. They'll tokenize everything they touch: stocks, real estate, carbon credits, art. Each digitized, fractionalized, and fed into a liquidity pool where AI hunts the spread. It's seductive, efficient, inevitable. But remember, when everything's tokenized, nothing stays hidden. Transparency cuts both ways. The same code that frees you can also map you. That's why the garage exists, to read the code behind the narrative before it becomes law. This is the age of the synthetic economy. Liquidity from the Fed, intelligence from AI, validation from the chain. Three engines, one machine, and tonight the merge just hit ignition. This is the crossover, where politics, money, and machines all lock gears. Trump in Beijing, meeting Xi Jinping. Smiles, cameras, words like amazing. But make no mistake, that wasn't diplomacy. That was a trade, disguised as a photo op. Tariffs ease, supply chains unclog, capital starts flowing east to west again. Commodities spike, shipping futures light up. Analysts call it recovery. We call it coordination. Two superpowers sinking the throttle. The Fed cuts. Beijing injects liquidity. The dollar starts to stumble. When the world's biggest debtor and its biggest creditor both hit easy mode, it's not peace. It's a currency rewrite. Gold sniffs new highs. The dollar drifts lower. Liquidity ripples through the system like an oil slick on water. It looks calm until you strike a match. Meta raises 25 billion to fund its AI arms race. Japan channels half a trillion into US industry. Saudi liquidity migrates to tokenized assets in Dubai. Different countries, same playbook. They're all feeding the same engine, the digital dollar AI nexus that's replacing Bretton Woods in real time. And beneath it all, the great divergence grows wider. Main Street cutting hours, Wall Street setting records. The chart's green, but sentiment's cracked. Liquidity's back, trust is gone. That's the cocktail that births revolutions, financial ones or worse. The garage sees it first. Money doesn't live in one country anymore. It lives on chain. It follows code, not flags. Trump and Xi shake hands for the camera. But behind the scenes, whales, funds, and algorithms shake hands in silence. One handshake for politics, one handshake for capital, both moving markets faster than governments can explain them. That's the crossover. Macro and micro running the same lap. Policy in Washington, protocols in Solana, and liquidity connecting them both. Push cash in one corner of the map. Risk ignites in another. Old world thinks it's steering the wheel. But look closer. AI holds the controls. Crypto fuels the engine, and geopolitics presses the gas. When all three line up, policy, liquidity, technology, the track lights up. That's when cycles end. Empires pivot. Fortunes get rewritten. The straightaway's clear. Next stop, the trench. That's where emotion dies and data takes over. Okay, we're at everyone's favorite part, the money. The charts are done. The headlines are dust. Now it's just math, discipline, and execution. We're heading to Vegas, Fremont Street, the only place that glows like a trading screen. Neon flickers. Music leaks from open doors. Tourists chase jackpots that never come. And in the corner booth at the Golden Gate Casino, Christian Triple X is already rolling. Hood up, eyes locked on three screens. GMGN, Bull X, Axiom, that's his toolkit. That's his pit crew. That's how he hunts the edge. The waitress slides by. Tired eyes, half smile, maybe a 5 on her best night. He nods once, doesn't look up. He's not here for the drink. He's here for the data. He calls it the craps table protocol. Every token is a throw. Liquidity and volume, the dice. Timing, the payout. He filters the Solana field. Age, 30 days plus. TVL, 1 million minimum. 24-hour volume, 50K or higher. GMGN lights up. Bull X cuts the noise. Axiom runs the forensic scan. No honeypots, no pause, no tax traps. The table's set. The dice are digital. Pippin, 11 months old. 3.1 million TVL. 10.7 million volume. Perfect chart. Too perfect. Pass. Jelly my jelly. 9 months. 8 million TVL. 13.5 million volume. Crowded table. He plays light. Scalps. Exits. Troll. 6 months. 4.4 million TVL. 3.9 million volume. Depth. Rebuilding. He drops 7,500 scout. 0.2% of pool liquidity. The roll hits clean. He presses to 15K. 4% profit. Walks away. Pay AI network. 7 months. 1.3 million TVL. 5.7 million volume. Fin liquidity. Steady flow. He adds 5K. Exits plus 5.5%. Chill House. 6 months. 1.1 million TVL. 3.2 million volume. Low edge. No play. Fold. Useless coin. 5 months. 5 million TVL. 2.3 million volume. Spread wide. He tests 2K. Front run by a bot. Minus 2%. Neat. 6 months. 1.5 million TVL. 1.5 million volume. The degen table. He tosses 1K. Candle prids 12%. He sells into the pop. Doubles out. 5 active plays. 2 skipped. Total exposure 30K. Spread across 23 million in liquidity. Average win 3.9%. Risk per throw 0.25% of stack. GMGN feeds the flow. Bull X confirms the exit. Axiom logs the data. No emotion, just rhythm. That's how the trench stays alive. The casino roars. Fremont flashes. He leans back, finishes his drink, drops a 10 on the tray. You don't beat the house, he says. You learn its algorithm. He steps out into the desert heat. Neon splashes across his face. The night hums like an overclocked GPU. That's the trench. Discipline, math, conviction. Under lights that never go out. Okay, Garage Gang, time to cool the engines and pull into the garage. Lulu sent me the numbers, and I'll walk you through every line she just ran. We're keeping it tight and clean. 4 screens, 4 stories, 1 pulse. Bitcoin, trend channel still intact. Lower rail between 1088 and 1096K. Lower high, lower low sequence. RSI in the mid 40s, that's exhaustion, not collapse. If we close above 109,310, momentum flips. Lose 108,200, we tag the bottom rail fast. Translation, wait for confirmation, not hope. Ethereum. holding the 100 bar MA at 3,800 even. Support solid at 3,790. Resistance 3,850. Short-term MA starting to curl up. Early momentum build. If we clear 3,880, next target 3,950 to 4K. If we lose 3,780, momentum stalls. It's a balancing act between patience and precision. Solana, currently around 185. Hidden bullish divergence on RSI. 42 rising while price sits flat. As long as 184 holds, bulls still own tempo. Break 187.5, we run to 193 and 195. Lose 183, we slide to 179 before catching breath. Volatility's back, but controlled. Cardano. Now this is where Lulu got specific. Price is sitting right around 60 cents. She said watch the moving averages. They're the heartbeat of the chart. The 5, the 10, the 20, and the 50. You get balance. When they cross, you get motion. If ADA holds above 60 cents and the short-term averages start to turn up, that's the reset. If it closes above 62.3, we ignite a run to 64.8. If ADA slips below 59.8 and the 5 drops under the 50, momentum dies and we fade toward 57.5, maybe 56. So the math is simple. Hold 60, neutral. Break 62, bullish. Lose 59, bearish. No guessing, just reaction. Lulu always says, you don't trade the dream, you trade the data. Volume down, RSI coiling, price compressed. That's the cockpit before ignition. When the confirmation candle prints, we move. Until then, hands off the trigger. He looks up at the camera, neon reflection off his glasses. That's your Thursday night wrap. The garage runs on discipline, not hope. Keep your stops tight, your screens clean, and your ego in neutral. And just as the lights fade, he grins. Oh, and for disclosure, Lulu's a pig. Head of technical analysis here, in the garage. No opinion, just math, and she never lies about support and resistance. Oh yeah, don't forget